I'm NAVI Dowty. I'm from the Chicago area. I grew up in a small town, southern Michigan. Spent a lot of time running around in the woods near our house, playing baseball at local sand lots. One of the other things I did was I went out in the backyard and picked cherries and raspberries and then delivered them to the local ladies. And as I got a little bit older, I started delivering papers. And of course the local ladies were upset because I quit sending or giving the cherries to them. And they liked making cherry pies. As I got a little older, I started working at the local gas station where I worked all through high school and on into college. I spent a lot of time though as I was growing up in the basement at my grandfather's house in his workshop. He was always inventing things, and so I'd sit there on the floor watching him tinker on his workbench with motors he was building or things he was inventing. Growing up all my life, this story stuck with us. He believed he had invented the first automatic transmission. He left it with the attorney to patent and went off to France in the First World War. And when he came back, car companies were manufacturing it and the attorney had disappeared. We always had that story in the back of our mind. Just imagine if we'd have made $1 on every automatic transmission ever made. I always had kind of in the back of my mind the idea that someday I would invent something that would help millions of people. And that's kind of what I do nowadays. My idea being that I'd like everybody to be financially independent if possible. And so my process is, I call the Smiling Retiree process. It's a simple 9-step process. There's a foundation, there are obstacles, and then there are strategies. And in each of those 3 areas, there are 3 things. And so just as an example, what would be big obstacles? Well, rising taxes are certainly a big obstacle, and rising inflation is certainly a big obstacle. Well, how do you deal with those? And my 9 steps, actually everybody that ever retires has to go through these. Whether they articulate it as 9 separate steps or not, but these are the 9 steps that everybody that's ever retired goes through. I just have it laid out in a process that people can go through. I've helped thousands of people get into retirement, and I ran across the idea that you should write it down as a specific process, and I just worked on it over the years, and it's the process that I take people through now. The 9 steps in my process are: what's the vision of the future? Where are you at right now? How reliable are the things that you have done right now, that you have set up? Then you go to the obstacles. Taxes, biggest expense that everybody has. Then we have to decide how much, if any, of your income in retirement do we want to have from promise-based sources. Warren Buffett, Bill Gates, Jeff Bezos, it doesn't matter what happens to the market with them, they'll have plenty of money even if it crashes and goes down forever. But for a lot of people, you really need to know how much income you're going to have in retirement. So that's the that'd be 7th step. Then allocate it at last. How do you allocate? And then the last step is take action. Here would be an example of something just in regard to taxes. We had this businessman just retired, still had a lot of income. In fact, last year we did his year-end planning, and he said, we asked him, what do you think your capital gains will be? He said about $250,000. Well, when we got his tax information this spring, it was $650,000. So big difference, right? So he had a building where his office had taken up about 10% of the area, and he had rented out the rest of it. So what we were able to do, and anybody that has a big building can do this, we were able to bring in some engineers, look at the depreciation on his building, And it cost him about $25,000 to do this. So my rule of thumb is if for whatever it costs you for this type of analysis and to fix something like that, you should be able to see that you're going to get at least 3 times that back. So in his case, he would have had to have saved at least $75,000 to make this make sense. And he ended up saving $180,000. So $25,000 cost saved him $180,000. That was one of the things we did. Another one that was kind of interesting, I had a client that came into me in the early 2000s. He had just sold his business, or we helped him save taxes on selling his business. And then we managed the money for him, he and his wife. But part of that was he brought in an old insurance policy that he had bought, $1.5 million insurance policy. He had stopped paying on it, and he had 3 kids, and they were going to be the beneficiaries. So he'd stopped paying on it, and it had some cash value, and it kept going up. So we looked at it every year for the last 18 years now. And then suddenly, it hit $95,000 in cash value, and then that was last year, and this year, for the first time, when we looked at it, cash value dropped to $82,000. So $95,000 down to $82,000. So we would see that it was going to start to cost a lot more to keep this policy intact. What could we do? Well, I thought, well, maybe we could find somebody that would buy it. And I proposed to him that if we could find somebody that could buy this for double that, $82,000, it would probably be worth it. And he agreed to that. And we put it out on auction, and imagine what we got. We got $640,000. It was just shocking. $640,000. And so they wired that to his account, and then the next day he was able to send $100,000 to each of his 3 kids. They were all pretty happy, and then he had $340,000 left. So way more than the $82,000. That's just a couple of things. I think that America will be better off if more people can be financially independent, doing the work that they love to do rather than the work that they have to do. It's almost a political thing for me. I just, rather than be a slave to somebody, be financially independent and control your own destiny.